there are people who are looking for quick solutions. Theodore in Woodstock, Georgia, writes in with a question a lot of people have asked. He says, should the SEC suspend mark-to-market accounting?
Well, you know, I've always been theological on mark-to-market accounting because I've seen so much of what people do when they're allowed to use their imagination on balance sheets or income statements. And frankly, American business misbehaved in a big way, particularly in the 90s. But people did play games with numbers, and they probably still do. But it was almost accepted as a way of doing business. So I've always been suspicious when you give a CEO a pen and tell him it's the honor system. And anything other than mark-to-market works in that direction. Now, it's true, I think, that mark-to-market has had it's been some gasoline on the fire in terms of financial institutions. The markets are, on certain things, are pretty unrealistic, which is why I said just a little while ago that I would rather buy the toxic assets at market from a bank than their best assets. There's more money to be made in those, and they've been marked to a level where there's a lot of money, you know, where they're probably below fair value, in my opinion. So I'm sympathetic. I think the best way to handle that, though, probably still, is to have the mark-to-market figures, but not have the regulators say, we're going to force you to put a lot more capital based in on these mark-to-market figures. I say in our annual report, we mark everything to market. I say I don't agree with it in certain cases, and I explain my reasons, and shareholders can decide whether they think the reasons are valid or not. I hate to give it up.